Service improvement and regeneration. First item on the agenda is apologies, and I'm afraid we got quite a number. Councillors Peter Black, David Jenkins, Mary Jones, Steve Jones, Will Thomas and Paxton Hood-Williams. Second item on the agenda is the disclosure of personal and prejudicial interests. Members first? No? Any officers? No? Okay. Obviously, the next item is the prohibition of whip votes and declaration of party whips, which is a common practice on scrutiny. The next item, item 4, is the minutes of the previous meeting, minutes of the 10th of September. Are everybody happy that this is a true and accurate record? Okay, thank you very much. Item 5 is public questions, and we have none. I'm moving rapidly on to item 6, which is quarter 1 revenue and capital budget monitoring. Is the leader online? No. Okay, can I then move on to actually Mr. Ben Smith, who is the Director of Finance? Over to you, Ben.
Thank you, Chair. Good morning, everyone. You have the report that went to Cabinet last cycle in front of you. In terms of my technical advice, of the 4 recommendations, the important ones were number 2 and number 4, because they were very substantial asks for exercise of Cabinet permission to do environments, having way exceeded my delegation threshold. And in recommendation 4 to Cabinet, it was noting the indicative significant service overspend, but also the material triaging undertaken in year. So that is summarised in section 2.3, which is a tale of 3 directorates about okay balanced, but 2, notably social services and place, significantly driving a near £12 million reported service overspend at first quarter. That should not come as a surprise given the tales of woe that you will hear from every council up and down the land. Common theme from me, I'm afraid. Social services spending is under very significant pressure everywhere, and place is particularly driven by the very substantial increase in homelessness costs. Again, these are not surprising when compared to other councils. I set out in 2.8 my advice to Cabinet that there remain a number of uncertainties. There is no sign of local government pay award being settled, so no money has been spent all year. I remain confident the amount I've budgeted for in services plus central inflation will cover any outcome. At the time of the report going to Cabinet, a 5.5% pay award was offered in England. We were awaiting the Welsh news. That 5.5% offer has also been made in Wales, but there is a consultative process underway. We have been promised that there will be funding for the excess cost of the pay award, but I am still here halfway through the year waiting for the promised extra money from UK government to Welsh government for the increased pension costs that I have been paying since the 1st of April. Far from ideal that I've been waiting now more than 6 months, as is every authority in Wales, for some certainty on what I'm going to be reimbursed. These are not insignificant sums. A full year effect of the pay award excess could be 3 million, could be 6 million on pension costs. These are very material sums that adds to my overall uncertainty principles. Section 3 sets out in normal fashion the contingency fund, but this is an important position at first quarter. Yes, there was just over 3.5 million set aside in contingency, and as you are well aware, from the outturn position, which was much improved, an additional £12 million was added to contingency, and many of the items flagged for indicative reallocation right at first quarter when the outturn report was received. And that indeed is the case. So of that £16 million cumulative contingency fund, the message is it's all been allocated, potentially spent. I emphasise potentially spent. A number of the items were agreed at Cabinet in terms of the additional FPR7 spends. There was also agreement to underwrite the costs of social services and homelessness. A number of them remain contingency sums. How much will be short on teachers' pensions? How much are we likely to have in terms of legal mitigations and litigations? So it doesn't mean that it's totally gone. It's just at this point in time, I believe it is gone. That's an important position at end of first quarter, fully committed. Just shows the scale of the triaging we're having to do. On page 8, it emphasises in bold, and there's a reason I choose to put some things in bold. That triages the position for the current year, but doesn't make any of those problems go away. And I'm sure they'll come back in due course as we debate the next year's budget setting. Section 4, in terms of central inflation provision, there was a very large virement between education and place for homeschool transport, but a substantial part of the pressures was also carried in central inflation. So as well as the virement being sought, a significant release from central inflation was authorised by Cabinet. It still means there's a significant sum there, but as I've indicated, I'm awaiting certainty on teachers' pensions costs, teachers' pay, and the local government pay award. All three are clearly inflation-related issues that remain at large. Savings tracker in section 5 in normal format only summarises a position. 65% delivery, a little bit disappointing, but not dissimilar to first quarter of last year. And it remains a forecast. At first quarter, when we've got tens of millions of pounds not known about, it's really difficult to have absolute certainty on the granularity of that. And it is fair to say that this is an evolving relaunch of the tracker to try and provide some greater assurance over where we are going through the year. I expect to have a material update for the second quarter, which will flow through in due course imminently, given that we've just passed the end of the calendar second quarter. It takes about a month for me to read the ruins and come to a view in terms of advice ultimately go through to Cabinet. So pulling it all together in terms of the revenue budget summary, the table at the top of page 10, service overspending. Cabinet did make decisions to transfer money from contingency for social care and homelessness, emergency triage action at first quarter, and did agree the top up from central inflation for the environment from education to place. So that left us in a net position of £500,000. Perfectly acceptable, perfectly reasonable, certainly compared to most other councils. But of course, it's the one-off nature of all of them, and that service forecast overspend isn't going away anytime soon, unfortunately. In part B, just below that, I indicate that it's another good year for capital financing. Base rates came down 0.25%, but they have proven very sticky. They're still at 5%. I've now had 6 months of guaranteed income on my cash balances of 5%. So I'm really confident there'll be a minimum of £7 million on capital financing, which in line with previous council decisions will be flowed through to the capital equalisation reserve. Capital budget in section 7, pretty much not par for the course at first quarter. 15-16% spend, not unusual. We do seem to struggle to get things away in the first quarter. I'm sure there will be significant spend during the rest of the year. And at this stage, I've got no cause for concern, especially as you know that I just then sit on the cash and make several £1 million more in investment income in the short term. So I'm always the one rubbing my hands in glee on that one. But it's always a matter of focus from both the administration and yourselves when scrutinising as to what is being delivered, how and why. Housing revenue count remains under pressure, but is funded separately in ultra ring fence. Bringing it all together in Appendix A on a page, you've got that same just under £12 million of net directorate overspend that has been triaged. You will see that the contingency fund is got £8 million showing on it. That's because at the time the report was done, Cabinet hadn't agreed to release the £8 million. It now has. So in the second quarter, that becomes naught. In similar vein, the inflation spare becomes down by the 3.3 million allocated to place from education, because Cabinet has now made that decision since having received the report. I've disclosed the expected minimum £7 million on capital financing, which is down towards the bottom of the table, and gets you to a position where overall I'm anticipating that we will use £12 million less of our reserves than was the case when budget was set. Still remains the case. It was another year where very substantial reserves were planned to be deployed. Given particularly the windfall nature of the capital financing, which is one-off, 7 million of that £12 million underspend flowing through to capital equalisation reserve, you still have a material £11 million planned draw from reserves. And that, of course, excludes schools, because schools reserves are neutralised through the overall schools position. I do expect there to be a significant draw from schools reserves, and that will play out come reporting at outturn. So, given where other authorities are, I am perfectly relaxed at first quarter, given the amounts I've got in central pots. I am perfectly happy that Cabinet has taken decisions to triage the risks, but I remained perfectly unhappy with the risks that remain in the base going forward, as I'm sure every authority and every local authority member in the land would attest to. So that's my advice, and I'm happy to hand back to you, Chair. Thank you.
Thank you, Ben. If the leader would like to say a few words.
Thank you, Chair. Apologies, I was delayed at my previous meeting, but just to add to what Mr. Smith said, I fully concur with his comments. In one respect, it's a very, very positive position to just be in a position where there's a small variance at first quarter, but also accept what Mr. Smith says, that we remain in very uncertain times, we await the government's budget in Westminster on the 30th of October, and obviously the Welsh Government determination in December. But we're likely to be in a continued position of a single-year settlement followed by a multi-year settlement, which then adds in those sorts of risks around whether or not we're able to plan effectively for future years. So again, commend Mr. Smith and his team for the work they've done to do this. Just to say, Chair, when we came to the previous scrutiny meeting, I highlighted there our intention to potentially make some decisions around deployment of the contingency reserve. That has now followed through, as Mr. Smith has said, and all of those investments now have therefore progressed. So again, nothing further to add, but happy to take questions.
Thank you, Leader. Any questions for any members? Councillor Jeff Jones.
Yes, thanks to the report. Thanks to the work, Ben, as normal. We've actually got this forecast overspend of 11 million. That's forecast until the end of, shall we say, the middle of 2025. How realistic is that forecast? Because there seems to be, shall we say, a large overspend and underspend in some areas up until this particular point. How is that actually calculated with regards to forecasting to the end of the year? We seem to have a big overspend now. What's actually happening for the rest of the year to come out with this forecast, or what's not happening, shall we say?
So
thank you, Jeff. Ben?
Two answers. I think in one sense there's always a concern that we err on the side of caution, and it's a normal pattern for us to report large overspends and then to see progress during the year. But the thing that has materially changed is actual spend on the ground in terms of social services provision and in terms of homelessness demand and therefore spend are both so materially elevated compared to any even normal year. You will hear the same from 21 other authorities in Wales, that it is a near certainty that those figures which are projected forward on spend will occur. I expect social services to get slightly worse before it gets better. I think homelessness could get worse before it gets better. The Director of Social Services has committed to making £3 million worth of in-year savings plans and arrangements to try and limit the overall pressure on the authority. But it is done in normal fashion. Individual directors and heads of service forecast forward. But I think the thing that is different this year is the actual spend already incurred in the first few months has given me greater confidence, alas, that there is a certainty of overspending on both social services and homelessness this year. I would remind that in previous years there has actually been an underlying overspend on social services. It's been managed by drawing from significant earmarked reserves in social services, which you heard the Director of Social Services refer to in his update to Council last week. Most of those have gone, and therefore he can't rely on earmarked service reserves to triage the position himself. He has to rely on the generosity of others across the directorates and in terms of central pots to be able to mitigate it. So I remain very confident, alas, that they are very likely to occur, particularly in homelessness and social care. But equally, I'm very confident that we had sufficient sums set aside to be able to manage it in the current year. I am less certain going forward simply because there's very many uncertainties. There are things I don't even know in the first half of the year, things that have been spent and not reimbursed. And as the leader has indicated, we're only expecting a 1-year indicative settlement and a multi-year settlement to come in due course. So that's the basis of it, Councillor Jones.
Thanks for that, Ben. On one hand, it's good to hear as well that the pension costs on the pay award are not going to be met by schools anyway. But on the other hand, it is concerning really that we've not heard anything with regards to reimbursement. If it actually turns out that, shall we say, we won't get reimbursed by the year end, what sort of pressure would that actually put on us?
So I think I can give you some reassurance that we won't not be reimbursed by year end, double negative in there. All the latest indications from Welsh Government officials are they expect to be in a position to make an offer by way of grant on pensions in November, and we would expect the same in terms of teachers' pay. That in itself provides one-off specific money for this year. How much it is, we'll see. We have committed, and the terms will be that it will need to be washed through to schools and other maintained settings, predominantly the pupil referral units. It will wash through as soon as we get it. I have no concerns that it won't turn up by year end. If you'd asked me that a month ago, I was worried it might not turn up until February. I'm now being advised that it's coming in November. That means it's annoyingly too late possibly for second quarter, and for me to I might be able to at least sneak a commentary in on it and what we got. But I think they will turn up without doubt. I mean, other than that, it would be up to £6 million on pensions, and a 7/12 effect on teachers' pay could have been 2 million. But I think it's all going to be in the hypothetical, Councillor Jones, because I do fully expect to be given grant offer. Whether it fully reimburses on both of them, unfortunately the way this works is it's done by big government and big ticket items. So the first decision is made by UK Treasury through UK government to Welsh government, and then Welsh government makes an allocation to each individual authority. And the reality is there'll be individual winners and losers once it gets down to the granularity of individual schools, who will be very concerned to see what they get. But the undertaking has been given and will be underpinned by the grant offers for this year, that the money will have to go to schools to top up for any differential. There will be some interesting nuances, because we of course budgeted for a 5% pay award, so we weren't that far off the offer. I think Welsh Government indicated they'd budgeted for 3.5% for pay awards. We budgeted for 5% for teachers. So there's an interesting nuance there that we will take stock of once we've had the specific grant offers in front of us. And then the big joker in the pack is I am looking forward to being absolutely assured that come the settlement in December, both the teachers' pensions one-off money specific grant and the teachers' pay specific grant money one-off are both transferred into the base, because teachers' pay costs and teachers' pension costs are for life, not just for Christmas. I have made that point repeatedly to Welsh Government officials. There's no reason to doubt that there will not be transfers into the base settlement, but until I see it come mid-December, I won't know. Thank you.
Yes,
Right,
thank
Jeff?
you. Yeah, I've got another question, but leave it up to somebody else now.
Is there anyone else? I've got some, but the leader was to say a few words.
No, it was just to add to what Mr. Smith said, really, in terms of Councillor Jones's first question. Again, I know he references the 11 million. Just to reference back to WLGA, they're reporting around £600 million worth of pressures across Wales as a minimum this year. If Councillor Jones wants to have a look around Wales, he will see councils not too far from us making decisions to invest some extra £10 million to deal with pressures, and those are councils that are smaller than Swansea. So again, I think the job that's been done by Mr. Howes and his team to try and make sure that we try and stay as ahead of the curve as we can has been very good. However, the pressures, I think there's 22% uplift in terms of people coming to the social services front door has been reported in terms of an increase in pressures. That is significant. And that's one of the reasons why Cabinet made a decision to immediately shore up social services with an extra 6 million in quarter one. Homelessness pressures are equally pronounced, as Mr. Smith has said. They continue to be huge across Wales. We cannot build or acquire houses as fast as people need them, and that is not a Swansea issue, it is a UK issue, which is why both the government in London and the government in Cardiff are exercised about delivering more homes for people, so that when people do present as homeless, we can get them into properties as soon as possible. So just to say, they are known pressures, they aren't speculative pressures, they are real. But, you know, just to come back to where we've ended up at first quarter, we are less than £500,000 adrift given the one-off actions that have been taken. But as Mr. Smith quite rightly says, there are longer-term pressures that will need to be addressed, and that can only be addressed through funding from UK and Welsh Government, because they need to be providing local government the necessary resources to support the services that we run.
Hey, anyone else? No. I've got quite a few.
Oh, go on.
Sorry, who's that?
Yeah,
Jeff again. Okay.
Sorry, yeah, I didn't have a chance to put my hand up. My screen is playing, going all over the place here. But yeah, thanks for that from the leader. And yes, I do understand that there are pressures and other authorities. We're actually scrutinising Swansea's at the moment anyway, you know. And you know, it is a concern to us, and it is a concern to, I think, to all councillors, with regards to how much money we've got at the end of the day. One other thing I was going to bring up really was regards to the capital finance charges. It's good, you know, we've actually got I think an underspend of 7 million. But I'm always wary, or worried. I am a bit of a worrier anyway, with regards to, as we actually go down the line. I think we're in we're in a better place with the work that Ben actually did with renegotiating the borrowings anyway. But again, going back to the MRP, I think we've been in a good time as far as the MRP calculations go. But further down the line, we're actually going to go into, shall we say, a payback time. You know, everything we've not paid so far, it's going to be a cost to us further down the line. So when are we actually going to start moving into shall we say, a negative territory, if we are going to do so?
So Councillor Jones is right that the MRP flips and starts getting slightly more expensive, having been slightly cheaper. I would emphasise that the advice I gave was it is a zero-sum game over the life of the investment on the assets. So I remain entirely happy that it's better matched to assets that will last for a significant period of time. You've got the two interplays. Yes, the MRP gets tighter, but we are underspending on MRP, and I've provisioned sufficient for the borrowing I've done so far. As you've heard repeatedly in Cabinet Council and in this scrutiny panel, there is £25 million deferred for Mumble's CRMP, which is mostly built, and there is £50 million worth of deferred borrowing. So I've still got £75 million to get away, and I anticipate that will cost a minimum of £3 million for the combined minimum revenue provision and interest charges in due course. At the moment, it is entirely swamped by base rates. When I first took out that borrowing were 0.25%. At 5%, 200 million in cash in the bank is making me £10 million worth additional net investment income every year. The reason I've gone for 7 for this year is we are spending down on those cash sums. So we will gain repeatedly for several more years on the income side, the net interest side. It does get tighter on the MRP, but I have provisioned for what I need, and it's part of the reason why I've set aside money in the capital equalisation reserve. It will get tighter still when I have to go out and borrow additional monies, which is well trailed. I have already authority to borrow that £75 million at the drop of a hat. I won't be borrowing at a drop of a hat. I've always said I expected rates to stay sticky, and even if base rates come down, our borrowing facility through the PWLB is linked to gilt yields, and gilt yields are going the opposite way at the moment over the periods at which we borrow over. So I am likely to sit on my hands, and I would anticipate that we will still not for several years exceed the budgeted MRP position, and we will definitively for several more years not exceed the provision that I've provided for the net cost of servicing the debt for the general fund. I want to make clear we are not going to repeat the £17 million outturn windfall bonus last year. It'd be at least £7 million. I wouldn't have committed 7 million in my forecast this early on unless I was really, really confident. But I remain absolutely confident that the capital equalisation reserve vehicle lasts until at least 2028. I hope still to 2030. And members do not need to worry over the medium term until at least then. And that is several settlements, several multi-year settlements, and several administrations potentially at both UK, Welsh Government and local authority level to get through. So I'm as relaxed as I can be, Councillor Jones. But nothing is certain in life.
Yes. Okay. Thanks very much.
Thank you, Ben. Elisa.
Yeah, thank you, Chair. And again, commend Mr. Smith. I think we had a similar sort of debate at council recently. The point is, given Mr. Smith's decision to borrow at that point in time with our support, we supported that rule. I know Councillor Jones had slightly different views and cautions around whether we were doing the right thing, but the reality is Mr. Smith's decision has ended up providing multi-million pounds of additional cash that can be used for investment, either in services or in capital schemes. We would have lost that. And I know, again, I know Councillor Jones says that he's only here to scrutinise Swansea, but you don't scrutinise in a vacuum. That you look around Wales and you can see councils having to make very, very, very tough choices because they don't have access to the sorts of cash locally that we have. And what that would have ended up as, if we'd have gone down a different route, you would potentially have been seeing far more difficult decisions coming forward for Cabinet and Council in terms of service reduction if money had not turned up. We have had the luxury, essentially, of a blanket that has given us some protection from the worst of the cuts. And again, I commend Mr. Smith for his excellent management of the financial resources of the Council, enabling us to have the headroom to do that.
Okay. Right. Anyone else other than Jeff? Fair comment, isn't it? Okay, I've got a few questions. I think, Ben, right, the inflation provision as of 24-25, a balance of 5.7 million. What are you going to do with that?
So if I am not fully reimbursed for the whole of teachers' pay or teachers' pensions, either because there isn't enough in the quantum or because we lose out bits at the margin, or because the local government pay award goes higher than I have budgeted for, they are the first three calls on it. I am most concerned about not being fully funded for teachers' pensions in terms of the actuarial assumptions made by both UK government and Welsh government flowing through, and that's why I've disclosed that one in contingency at the moment. Once that is confirmed, I am likely to give officer advice to move that call from contingency to a pressure on inflation, because it's clearly a pay price inflation related measure. So there are risks. There are 3-4 risks in there that could see £5 million go on if we lost on all of them. My assessment at the moment is we are unlikely to lose on all of them to that degree, but I don't know until any of them are settled, until offers are made. So that's the reason I'm holding it there. If we win on all of them or get a score draw on all of them, then I have no proposals at the moment, because I have no need at the moment to allocate any further money. Now, in the realms of hypothesising, if social care pressures are not triaged, both by the 6 million given and the £3 million commitment given by the Director of Social Services, despite, I'm sure, undoubtedly their best efforts, there may be a need to consider it there. If no one else makes any legitimate claim on it and Cabinet takes my advice and no one needs to spend it, then potentially that will wash through to being another underspend at year end, because at the moment I don't need to fully deploy it. Things will become more certain when each of those 3, 4, 5 risks come certain. I suspect at third quarter on some of them. Some of them will be firmed up by second quarter, at least for me to give verbal advice to Cabinet and yourself when I'm next back in front of you at the panel, because as I say, I'm anticipating 2 of them to be resolved in November. That's teachers' pay and teachers' pensions funding. And you never know, the local government pay award may also be resolved in November. I would like at least 3 of the 5 items resolved, because it would be nice to have a stable base in the current year before we continue to hypothesise what we might get in next year's budget, both in terms of funding and pressures. Chair, thank you.
Thank you, Ben. The other thing is we are putting money into the equalisation fund. Yet there are some, if you go to the mitigation on education and on social services, those cuts that we are looking at in those services, if we didn't put it into the equalisation fund, we could fund some of those cuts. Is that correct?
Yes, in one sense, yes. Whether they're cuts, I say they're removing overspend pressures, so I would be slightly quibbly there. But of course, my advice has been consistent for several years, which is the underspends on capital financing should be used to massage and smooth capital financing, either because we're deferring and therefore I'm the external borrowing and therefore I'm relying on the cash flow, or if there are any surprise overspends on any capital schemes that might have already come to Cabinet in the past or may come to pass to Cabinet in the future and require some significant timing adjustments, then that's a good use of it. I am aware other authorities have used their windfalls on capital financing, because most authorities have gained from base rates being elevated on their cash balances, and they have deployed them to prop up services. That is a legitimate choice. It's the exact opposite to what council's resolved about 4 or 5 years on the trot in terms of my officer advice. And of course, the danger is if you do that, you get used to that propping up above the line services. And then I suspect it may increase Councillor Jeff Jones's anxiety, because there'd be no money going into the capital equalisation reserve to pay for the all the pressures down the line. So yes is a short answer. You could, But of course, as an officer who is worried about managing the capital financing programme over the medium term and including some of those risks I am taking, I think they're low risks, but they're timing risks. I am more than happy that Cabinet at the moment and Council follows my advice, but they're in charge and you collectively are in charge at Council. So I may only give my advice and is a
I don't
legitimate
know about that,
choice.
Ben. That's a bit. That's a hell of a statement to make. And please don't put any more pressure on it, Jeff. I don't want him to have a heart attack. Right, leader.
Yeah, thank you, Chair. Just to expand on Mr. Smith's point, I think technically you could do it. That's clear because it's a revenue reserve. However, like all of our usable reserves, and we had a report at Council last Thursday, there's over £100 million worth there. You technically could take those and use them, but you would not have Mr. Smith's advice to do it. And as Mr. Smith said, you wouldn't do it because you would be potentially masking critical decisions that you need to take within services. Some of the decisions that we're having to make for savings, of course, as a cabinet and as a council, are because grants have dropped out or because funding streams have ended, and therefore, the council does not have the resource to step in every occasion when a government funding stream ends or a resource funding stream ends. So, again, technically, you can raid your reserves in the short term for specific purposes, but that has to be measured. It has to be sensible. It has to be defendable. It has to be proportionate. And again, you wouldn't do that because Mr. Smith has outlined. You just create different pressures elsewhere, which would be equally difficult to manage. So again, technically could, but not advisable.
Understand that, leader. It's just the fact that we've had this lump of cash that we've had interest on, which we've had now for about 3-4 years, and it looks as if it'll be going on for another few years. That could have been put back into the revenue budget, and over that period of time could have helped with the services that we actually supply. So it's just to confirm that, but we have used it as a buffer for any increases in the capital spend, or if there's been a very difficult, an example like with what happened with Oceana when we had to demolish it, and the additional costs because the asbestos, if that fund hadn't been there, that would have been had to been got from another part of the revenue budget. Well, understand that. It's just that you make a decision one way or another where it goes.
Yeah, Chair, just clarification really between the various pots of money, because as Mr. Smith describes them as jam jars, there are pots of money that sit there for specific purposes. We set up the capital equalisation reserve for the purpose of smoothing things out, and so that we didn't end up with a specific bill in a specific year that was unmanageable, and that's what we've tried to do with the capital equalisation reserve. Also, of course, we have drawn from that reserve periodically and then replenished it. And as Mr. Smith said, currently he hopes that will run at least till 28. We may get it to 2030. And we've continued to swish money in and out of it. So again, it's not quite accurate to say it's just sat there doing nothing when it could have been used. We have used it for specific purposes. And again, it has been a useful tool in terms of avoiding big hits on budgets in a single year. The other point, of course, is Mr. Smith, when he borrowed that money, has not deployed all of that money because of the capital programme timing. And therefore, there is over £100 million of borrowed money that's sitting there. And that's the money that Mr. Smith mentioned is making us more money every year. So when you take the two things together, they're very useful tools in terms of actually avoiding the sorts of cuts you say you would otherwise use that money for. So if you deploy, but the point I'm making is if you deploy them all in 1 year, you lose the value then of being able to redeploy them every year to smooth out and avoid certain difficult cuts in a single year.
That's why I said we've had it there for a number of years, and the interest we've earned off that money that we've borrowed and is now sitting in the treasury is the fact that could have been used. But that's an arguable point for another place. But what I'm trying to point out is that we have had money that could have been in the revenue account. But apart from that, we've used it. Right enough, we've used it. We've washed it in and out for various projects and what have you, which is right and proper anyway. But that's the reason I brought it up. The only other thing I would bring up on this is that if you go to, where are we? If you go to the capital budget, On page, I think it's page 11. There's a table there about the actual spend of 15%, and that's you are right, Ben. I've looked back, and the other years, first quarter slightly different, maybe a little bit more. On the whole, definitely a little bit more, but not that much. The one thing that sticks out there, I think, is the education one. Considering the problems we've had with some of the spend in education, it does seem to be quite low at £647,000. And I'm not sure why it's that low, because normally the education, you want to try and spend some in the summer months when, I know this is first quarter and it's difficult to assume that because it'll come up in the second quarter, but still and all, I think we need to have a little bit more understanding of what that figure is. Thank you. Ben?
Oh, so I wasn't sure if that was a question, Chair. I mean, I think I think that's one for written follow-up, and I will get education colleagues to give an explanatory note. But I think you are right to acknowledge that it will tick up in the second quarter, because the second quarter crucially includes the end of July, all of August, and first bit of September, which is the porky prime time to do schools work because the children aren't in the school. So I would anticipate going up, but I'm not able to give any further advice on any other rationale at this stage. So I think with your indulgence, that should be a follow-up question, and I'll make arrangements for education colleagues to give an explanatory written note, Chair.
Okay, thank you. Leader?
Yeah, Chair, again, wait for the full update, but I do know that we had different funding arrangements from Welsh Government this year, with money arriving very late in the year. Money arrived in July, which meant that officers had to reprofile how they did some of the work. And again, so there has been a bit of volatility in education. And of course, education, the bigger capital bills, again, those will dip and rise depending on what schools are being done at what stage. But certainly in terms of schools capital maintenance, I know that money was different last year and it did affect the spend profile on it.
Do we not have a problem with the school kitchens as well? And the funding for free school meals? I mean, the adaptation of the kitchens to increase volume, was that part that I'm not sure if that was last year and this year.
Yeah, absolutely. So that it has been a challenging programme for education to be able to accommodate universal free school meals, and there have been some challenging sites. Again, some of the money that turned up late this year has helped with some of the pressures that they were facing in that programme. So again, we can lay out that detail in an answer, but essentially we were in a unique year for capital maintenance this year for education. I think that's probably one of the determining factors why some of the stuff is so low.
Thank you, Leader. Anyone else? No, I know it's boring finance, but there we are. Right. Okay.
I do my best, Chair. I do my best to make it vaguely interesting.
No,
it's not boring at all.
It's like Harry Potter's come again. So, no, thank you, Ben. Thank you very much.
Thank you, Chair.
You're quite welcome to stay on and listen to the annual review performance report.
That's very kind offer. It's an incredibly kind offer, but I will seek your indulgence to go off and do some more bean counting, if that's okay.
Okay. Next item on the agenda is annual review of performance. Councillor David Hopkin.
Yeah, thanks, Chair. I've got no intention of going through the report, but what I will say, this is a new format from last year. This is the start of the process. We are looking for comments before we take it to Audit Committee, and then it will be going on to Council for the 5th of December. I'd like to put on on record my thanks to Rhian for bringing this report to us, and I'm more than happy to hand over to her. And as I say, it is a different format. It's less clunky than last year, believe it or not. So we'll that was the intention. We want to try to make it easier read. I know you might not think so, but it's far lighter than it was last year. So more than happy to hand over to Rhian to take us through the report.
Thank you, Rhian.
Thank you, Chair, and thank you again for giving us the opportunity to come here. As Councillor Hopkins says, this is your opportunity to have a look at the draft report before we submit it through the political process. So the report in itself meets our legal requirements under the Local Government Elections Act. As Councillor Hopkins already said, it's already been to the Strategic Governance Group for comments. It will be going to the Governance Audit Committee for their comments also before then going on to Council. The report is quite chunky, but in actually it just outlines our progress that we've made on the steps within our corporate plan to meet our 6 wellbeing objectives. The report includes the self-assessment process, so all directors were asked to provide a strategic assessment for each of the wellbeing objectives, and that is supported and supplemented with case studies and a review of our performance, and also an update on the areas of improvement that were identified during the last review. It is a slightly different format, and each wellbeing objective is presented one after another, and we just hope that you can appreciate the work that's gone into it, and we welcome your comments on the draft. Thank you very much.
All right. Anyone? Any members? No? And you've all read it diligently, I assume?
But
No?
I think it's a lot better than it previously was. I must admit, it's a huge document to read. It'd be interesting, really, with regards to what sort of feedback you actually get from the public. I think it's going to be quite restricted who actually reads it, but yes, there's a huge amount of work actually going into this, and it's definitely a lot easier. I can't say I've read it all by any means, but I've actually gone through a lot, and definitely a lot better.
Thank you, Jeff. Anyone else? I will say it is easier to read. Easier to read than the last one, which was quite difficult, I will admit. I think there's issues about how and when the timescales that we had to read it as well. And I think, even audit, I know audit will have a word to say about that as well, because there are issues around it, which I think, to say the further areas for improvement, etc. I think that's a difficult one to quantify, if I'm perfectly honest with you, because having read through it, literacy and numeracy skills are basically a schools-based project. It's a better way of putting it. The schools actually determine that. So I think when you put it in about developing a clear action plans for each plan details, I think the problem with that is you've got school advisors and school improvement advisors telling you, but I think if we are going to put that in, that we must emphasize the fact that it's a schools based, not, although it's a council, but it is actually school based. I think that's one of them. The learner's voice mechanism, I'm not quite sure that one. I don't think the explanation on that is actually that brilliant. And I'm not sure how you've actually done it, especially with disabled children. I think I think a greater emphasis on going to schools with disabilities, with children with disabilities, etc., and asking for comments from them might help. I think that's it, really. The post-60 one, good luck on that one. The digital strategy, the final inclusion strategy, that again was something which I don't know how you actually have done that, Rhian, because having read through it, it is quite difficult to understand that one, to be honest.
Yeah, I mean, just to say, obviously, the updates for the areas of improvement and the updated actions were provided to us by the wellbeing objective lead. So they themselves have taken an assessment on the work that they've done over the last year. They've talked about what they've done well and what they've done better, and those areas of improvement have come directly from them. But in terms of the wording, by all means, if you have any comments, we're not taking it to the Governance and Audit Committee until the 16th of October, so there's plenty of time to comment, and doesn't go to council to the 5th of December. So it's a very, very chunky document. I do appreciate it's quite
I think
intensive to read. But if I could ask for any comments by the end of next week, maybe. I can give you a bit more time if you have any more comments, but we can certainly feed those areas back that you've mentioned to the areas that have provided that information to see if we can get more clarity.
Okay, and I think all the others, Welsh Education Strategic Plan, that is okay. Monitoring of budgets, development street outline program, future capital requirements. Well, I think that goes without saying. That's going to be a difficult one. I think that's about it, really. But I think the digital inclusion one is quite. I don't know. I'll have a word with Rachel afterwards to see if we can put some words together. That I think it's to make it more user friendly, for the want of a better term. Okay. Thanks.
Yeah, no, welcome the comments. Thank you very much.
Anyone else? No.
Yeah, thanks, Chair. Again, I'm not intending to go through this report. The report is a really positive document. It is looking at the first quarter of this year. What I will say, obviously, the details are in the report. Again, it's a very comprehensive report. We have got the Chief Executive and senior officers will put up their comments, which I think is in the new format, and this also includes the element of risk as well. So I think it is a very, very positive document. I don't intend going through it. I'm more than happy to take any questions or any comments with the report. But I have got Susie online who is going to take us through the report.
Okay, Susie.
The report is on page 73 of your packs. It sets out the Council's performance for the first quarter of 24-25, and it describes the progress towards meeting the Council's wellbeing objectives set out in the corporate plan. Section 2.1 and 2.2 on page 74, they explain the integrated format used to review and report on the progress, and you'll see that integrates both qualitative and quantitative data, which gives a more rounded view of performance. It looks at the corporate plan steps, success measures, performance data and risks all together, along with a narrative assessment of overall performance from the Chief Executive and directors. So if you'd like to turn to the report itself, that's in Appendix A on page 79. The page numbers are on the side to the left. The format of the report itself opens with an overall assessment provided by the Chief Executive. The report then details progress towards each objective in turn, starting with the wellbeing objective on page 80, and a director's assessment of progress provided by the Director of Social Services on page 81. Then goes on to look at each of the corporate plan steps on page 82 and 83, looks at the objectives, success measures, before moving on to performance indicators relating to safeguarding on page 86, and finally looks at risk on page 88. So that structure is repeated for each of the wellbeing objectives in turn. So going back to the report itself, on page 74, section 2.3 displays a number of the charts summarising performance overall and demonstrates that the majority of corporate plan steps, success measures and performance indicators are on track and that the risks remain static. So you'll also see there that section 2.3.1 highlights demonstrable and positive progress across all wellbeing objectives, and it gives some example of good performance, while 2.3.2, that sets out the challenges and gives some examples of areas for improvement. So I'm happy to take any questions.
Thank you, Susie. Anybody got any questions? I've got a few. The first thing is I like the format where you have the landscape pages. I think it is considerably better than what we've had in the past. The only thing is we are going to have the problem is we ask questions on each individual service, and with respect, Susie, I can't expect you to answer some of these questions. So I think in future, when we have questions on social services, etc., or highways or whatever, I think we will be right into those individual departments for answers on it, because you collate the information, and obviously you don't know what the underlying, although there's a narrative in many cases. There's the ones about children, and the referrals and adults. We can't really expect yourselves to actually get them, and the sickness one is a common one, as that I think in every report that you've ever done, that's there. So I think it's those type of things that just highlight to you that in future we will be writing direct to the departments to ask them for their views on that particular issue in the performance report. But all the rest is very good, and thank you for the format. Anybody else, David?
Just on the issue, particularly on sickness, there's a considerable amount of work going on with Rachel Davis at the moment. I can give you some guarantees there. We are sitting down with the trade unions, and I think there will be further reports coming to JCC as well, particularly on sickness and sickness monitoring. So it is something we are very, very concerned about. We work very closely with our colleagues in HR as well on that one.
Okay, thank you, David. Anyone else? No? Okay, thank you.
Yes,
Jeff?
sorry, Chris. I was just going to say, really, I must admit, you read, I've got to say, perhaps some reports, and it paints like I know they talk about talking things up and so on, but I must admit this report really is giving a balanced view. Just mentioned about risks, it identifies things that if we don't do and so on. So I think it's a good, realistic report, shall we say, with regards to how the council works and what it intends to do.
Thank you, Jeff. Anyone else? Okay, if that's the case, thank you very much, Susie. Thank you very much indeed for your attendance today and going through the report. The next item on the agenda is the update on 7172 the Kingsway. I am going to ask the officer to give us a brief outline on where we are with 7172 the Kingsway. After that, there are questions going to be asked about the capital and fit out and the various other items, which I intend to go into closed session to discuss that. And the reason for that is we have done the public, I can't remember what it's called now, the public, what's it called? Public interest test. And we believe that in the interest of the council on some of these issues, it's better if they are done in a private session than in public. But initially, we'll ask the officer to do as much as he can on the out in the public domain. Thank you, Lee.
Yes.
Sorry, Robert, did you say?
No, I'd like to thank Lee for putting the report together, and I think it's best that Lee goes through it as the author of it.
Thank you, Robert. The report was provided to provide you with an update. I know you've all had a visit to the property as well, and so I'll just pick up the key salient points actually. So then, if there's any questions that you can raise, we can answer that as well. Haven't you? Right, visit to be organised then.
Yeah,
please. I thought
we cabinet have, but us minions haven't been able to go.
Okay, I'll make sure that's addressed. So apologies for that. Just to update you then, so the key objective, as you all know, for 7172 was to stimulate employment, economic growth and footfall in the city centre and the surrounding areas, and to provide that quality digital enabled flexible space. We are probably at a position now in Swansea for some time that we are able to offer any incoming tenant a variety of properties, starting from sharing of a simple desk all the way up to now with 7172 a grade A office accommodation. So that's really encouraging. And we're also working with other private sector developers who are building in the city centre as well, office accommodation, and any interests that come into the city are shared widely between us to make sure that we retain that interest within one of the properties that either we've got as a local authority or the private sector can offer as well. So it's a strong position moving forward, and you'll probably have read in the press that Swansea is outperforming a number of cities in its UK, attracting tenants into its Grade A office accommodation. So it's a positive news story that we can share with everybody moving forward. So construction started on site in November 2022. It was for 115,000 gross internal Grade A office space. Primary function, as I said, was for quality digitally enabled workspace, and it also provides within the property some areas of meeting rooms, communal spaces, and a high quality event space on that ground floor that could be hired out as well. Alongside the building, so you've got 71, 72, and then just to the side of it, you've got the HASA building, which is the biophilic building, and then in between the both, we've got Mowbray Yard. That's an open park area that will take you, a stopping point between the link that's being created now from the Kingsway all the way through to Oxford Street. And equally, we're working up a proposal to join the link between 71, 72 and into Picton Arcade as well. So you've got that four-way cross link working in and around that property, which is really, really important. The programme, so as the report says, practical completion, we are 99% there currently. Practical completion is now this month. There are literally a couple of items we're discussing with the contractor and trying to conclude those items. And we're, yes, very much hoping that and confident that we'll reach that position this month. We've, in the interim, appointed Savills as our building managers and building agents. They will manage the property on behalf of the council. So the day-to-day operation with the tenants going in there, they will manage that and undertake the service charge collections and everything else going forward. So that's a really, really encouraging. We've also set out in 3.3 for you a schedule of the tenants. And we've had a really very good response from tenants of this building. You're probably aware that across the UK since COVID, there's been a reduction in the requirement for office accommodation. There's been what they know as a flight to prime. So with many organisations still allowing their staff to work partly from home and partly from offices, everybody is rationalising their space. So when the opportunity arises during their leases and lease renewals to reduce that space, they are moving forward with that. But what they are doing equally is looking at the better quality of space available. So when they do take the space, it's smaller space, but better quality space. So as I said previously, we've got the opportunity in Swansea to offer that now, that quality space that perhaps sometimes was lacking in the city centre. So as the note says, all the interests in the schedule are in agreed format, and we're moving forward with all of those, and we can pick that up separately in the closed session. And we've also achieved the Platinum Wired score. We were really keen that we were able to offer any tenant coming into here the best quality Wi-Fi that Swansea could offer, and we've achieved that now, and we've got the recognition through the Wired score as well. If I could just move on then to just the final point to pick up in the key points and the financial implications on 6.1. We approved the final account, the budget figure of £41 million in 2021, but there has been some budgetary pressures and some changes as well moving forward on that, particularly because of the increase in energy costs, Brexit, and of course inflationary pressures. So if there's any questions on that, I appreciate if they could be in a closed session, simply because we're working through the final account currently with the contractor. So I think that's just a quick summary, Chair, of where we are. But I think the positive is the building is almost complete. There's really good interest, and I will arrange that viewing for you. And I think you'll be suitably impressed with the quality of the building that we are as a council able to offer the public. Thank you very much.
Okay, thank you very much, Lee. Members, Councillor Jeff Jones.
Yeah, the building looks impressive from the outside, and look forward really to having a closer look, shall we say, inside the building anyway. You've actually got on 2.6 high-speed fibre connection will be installed, and you actually say that there's a few things to be done surely it's been installed already by now, and that's part of a city deal program, or not?
It's the resilience, Jeff. So what we're trying to provide is various forms of resilience in terms of Wi-Fi connectivity. So part of the proposal for the city wide is to create that free Wi-Fi around the city. So the link that wasn't in place but is now, I can confirm, is the Vodafone link. So anybody walking from the arena across the bridge up to the market and around the city centre now has free Wi-Fi in the city centre.
Okay, thanks. Well, I was perhaps, I'm not a technophobe by any means, you know. And I can remember part of the city deal, the region, was to actually install, you know, very high-speed connections to compete with something that's available in London, Bristol, and so on, and we didn't have in Swansea. Has that been actually installed into, you know, into Swansea so that we compete with those city centres?
It has actually, and I'll dig out an old note that was produced by our comms team on that. And from memory, I think it was saying that in certain parts of the city, it's actually the fastest Wi-Fi connection in the UK. But let me just double check that. I'll confirm it and get that press release sent over to you for information.
That was around the post office tower, wasn't it?
Yeah.
When we done the work, when we done the pilot project with them, and that was near enough as fast as 5G as you could get.
Okay, that's good to hear anyway. You also said earlier that, you know, attracting, you know, tenants to Swansea. I can see the current office commercial accommodation breakdown really of the office tenants. I know you can't tell us who they are because it's not been finalised and so on at the moment, but are they actually people from outside the city, or are they people being relocated within the city?
Predominantly outside the city. We were really keen to get new jobs within the city centre, and the ones which are currently in the city are actually upscaling, so creating more space in quality space and new jobs as well.
Okay, thanks for that.
Okay, if there's no other questions in the open session, can I move the public interest test? And can the panel vote and agree that we go into private session to discuss the financial and the leasing operation of 7172 the Kingsway? We will also have to stop recording. All in favour? Okay, thank you. We are now going to private session. Can we stop the recording, Rachel?